Hi, everyone. Today, I want to talk about stocks I'm trading. Every Wednesday, I talk about some stocks that I'm currently trading. And first up today, Walmart earnings. Next, I will talk about the fact that bankruptcy seems unlikely for Carnival Cruise. And lastly, for this episode, I will talk about Barrick Gold and why Berkshire Hathaway bought it in second quarter. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying this 5-bed, 6-bath mansion in Big Fork, Montana, or if you want to be part of a well-educated financial community, definitely like and subscribe. It has a full weight room and a game room. It has a very nice sized kitchen and an interesting master suite. It's currently on sale for $2.9 million. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. First up is my position in Walmart. You can see on August 17th, I sold a put credit spread for $110, and this was the day before the earnings announcement. And I am filming this on the day of the announcement, and you can see I ended up closing the position at $15, which resulted in a $95 profit. So let's take a look at what drove the Walmart rally. The short answer is the world's largest retailer boosted their online sales by 97%. They beat expectations by over $2 billion and earned $1.56 per share versus the $1.24 that was expected. This caused the stock to jump more than 6% in the pre-market. During their earnings call, the CEO thanked all of their associates, as well as all of their customers for the trust and confidence that they have in the company. Revenue went up 5.6% or $7.4 billion from the same quarter 1 year ago. And Walmart has benefited from the Rona because it was deemed an essential business and was allowed to stay open. The Rona also led to strong merchandise and food sales, and the online grocery pickup has seen high volume. As you would expect, shoppers continued to pick up significant amounts of consumables, as well as household cleaning products and paper goods. Not everything was good, however, and Walmart pointed out that their transactions did decline 14%. I'm not sure quite how this matters. It seems to me that customers were planning out their trips better, probably because they didn't want to go out multiple times due to the Rona. They also mentioned significant competition from retail giants like Dollar General, Lowe's, and Home Depot. They say while Walmart is still king, the pandemic has given rise to more home improvement shopping and growing dollar store visits. However, all of this was offset by Walmart's muscular web sales, and the average ticket online grew 27% as customers consolidated their trips into bigger baskets. They also noted that the general merchandise category was bolstered by government stimulus, especially at the start of the quarter. Congress and the White House are currently at odds over the new stimulus, which is expected to top $1 trillion and extend additional unemployment benefits. Walmart stated as the stimulus tapers off, they expect to see sales normalize, but July purchases are still growing at more than 4%. General merchandise is growing in the mid-teens, and they see that shoppers are spending their stimulus funds on in-home electronics, outdoor living, lawn and garden, and sporting goods. Looking at my current position for Carnival, you can see I have sold the 11 puts with an expiration of September 25th. This position is currently in a profit of $10, and my plan is to continue to roll this out consecutively. Moving on to Carnival Cruise, if you're betting on bankruptcy, you may be disappointed. They say in the time where tech is growing at an unfathomable pace, the need for value investing is stronger than ever. They say when investors realize the resilience of the cruise industry during the recession and the ability for the company to service debt during the pandemic and future maturity dates, the stock may be too late to jump onto. They say the stock hit a low of $2.08 and rallied up to over $25 before dropping back down to $15.47. In this article, the author goes over their fresh capital raises, financial updates, and the new financial environment, as well as a couple of debt calculations. Here you can see the chart for Carnival Cruise, dropping down from over $42 a share down to $8, currently sitting in the mid-15s. Looking at revenue generation, they say areas like Asia and Europe, which generate 45% of revenue, are opening up quicker than the United States due to their containment of the Rona. The German brand Ada Cruises is planning to start sailing on September 6th out of Kiel and September 12th out of Hamburg. They also received approval to sail out of Italy. On the other hand, the United States has pushed back to October 31st at the earliest, with an approximate 30-day waiting period for ships to get ready. This means that Carnival will potentially have zero revenue for the rest of 2020 for the United States, and Europe, Asia, and Australia are due to pick up sooner due to their more successful containment, and Carnival has started discussions to open with those respective governments. He also anticipates the fact that capacity will be around 36.75% of pre-COVID rates, and this picks up to 64.8% based on a Rona vaccine. The two main risks for Carnival is the fact that they have debt that matures in 2023, and they are currently in a zero revenue environment. At the end of April in 2023, they will have to pay back around $13 billion, and they currently have around $7.9 billion on hand. This is the debt that is most pressing, and they are currently cash burning around $325 million per month. Looking at the cruise industry during recessions, in the 2008 Great Recession, revenues increased by 12.9%, driven both by a 6.7% increase in capacity as well as a 3.7% increase in ticket sales. So the idea here is that if Carnival can start cruising again, the industry should be resilient even during the weak economic times. Despite the increased revenues during that recession, cruise line stocks dropped around 16%. Looking at the chart for the 2008 recession for Carnival, you can see that 2008-2009, it dropped very quickly, reaching its bottom in less than 1 year, and then 3 years from that, it was reaching new highs. In conclusion, it's never clear until it's too late. And yes, cruise stocks are not making any revenue right now, and there is a serious debt load that needs to be paid back, but we believe that we will return to pre-COVID occupancy rates, and the current discount that Carnival is trading for, they view it as a strong risk to reward profile. Looking at my last position here, we have Barrick Gold. You can see I have sold a credit spread at $27, and for this credit spread, I received $50. Current value is $65, so it's in a losing position of about $15 right now. But the expiration is October 2nd, so there's still a lot of time to be right. Moving on to the Barrick Gold article, Warren Buffett took a stake in Barrick Gold, causing the stock to surge more than 10%. Berkshire Hathaway purchased $562 million of shares in Barrick Gold in second quarter, according to their SEC filing. This is a pretty small position for Berkshire Hathaway, considering that they own $89 billion worth of Apple stock. They are still the 11th largest shareholder in the mining company. While Buffett, a long-term investor, has long professed his distaste for gold, preferring assets that have cash flow or pay dividends, the shares of the mining company have surged 64% in this year's investor rush into the safe haven that is precious metals and primarily gold. Gold prices have had an outstanding year, topping $2,000 per ounce this month for the first time ever. Speculation says that this is because of the Rona and the large amount of cash printing coming out of the Federal Reserve, which has led to the 30% rally in gold prices. Looking at the chart for Barrick Gold for this year, since January 1st, it was around $18 a share, and it's currently sitting right around $30 a share, which means it has rallied a little bit since this chart was generated. Barrick Gold has gold mining operations as well as copper mining operations in 13 different countries and is traded under the ticker symbol GOLD. Again, to reiterate, Berkshire's position in Barrick Gold is relatively small and was put in by one of Buffett's lieutenants. So to summarize, I did put on a put position for Walmart this week, and then Walmart rallied after a good earnings report, and I closed that position. Carnival Cruise stock has been beaten down pretty heavily, and they do have a heavy debt load to overcome, but it doesn't look likely that they will fall into bankruptcy quite yet. And lastly, Berkshire Hathaway bought Barrick Gold, and I currently have a put position to buy the stock at $27. Let me know down in the comment section what you think of each of these stocks. Definitely like and subscribe if you got any value out of this video. Of course, this is not financial advice. This is all for entertainment purposes. And with that, let's get to the jelly. So today's jelly is a monk who does a type of beatboxing. So here's a little bit of what that looks like. Clearly, he is very talented, and this must be a pretty unique skill for someone in his position. Definitely comment down below what you think of this video. Like and subscribe before you go, and have a great day.